You're listening to Confessions of a Bookkeeper, where we look at businesses through the eyes of their books. My name is Mark, your Chief Bookkeeping Officer, and I spent years cleaning up and reviewing some, let's say, interesting books. When you work in bookkeeping long enough, you start to see patterns. Every industry has its own personality. Law firms have their own trust accounting habits, med spas love subscriptions and memberships, creative agencies have their own rhythm too, and that's what we're talking about in today's episode. They are energetic, fast-moving, ambitious, and usually allergic to anything that smells like accounting, and that's not a criticism, it's just the nature of their work. When you're focused on the creative output, the artistic vision, and the deliverable to the client, the numbers tend to become something you only think about when something feels off. A while back, I met a creative agency in California that really highlighted this dynamic. They were a wardrobe and makeup team that serviced studio shoots and different production companies in the Los Angeles area. The owners were a husband and wife team, and like a lot of creative professionals, their business started from a very organic place. They were good at what they did. They worked hard, clients loved them, and because of that, work kept coming. They had been doing it for a few years formally before they crossed my path. When I met them, they were sitting around the 10 employee mark. They had grown from 2 people to 10, and the revenue from the previous year was around maybe $800,000. Based on deposits alone, they were likely going to hit at least $1 million for the current year. That kind of growth is exciting and completely earned on their part, but it also creates complexity. They had no bookkeeping done for the current year, and they were doing everything before that themselves inside QuickBooks Online, and doing it the way most people do when they grow fast. They were just doing their best. The pace of their growth was not sudden. It looked like a clean 35 to 50% year over year, and whoever thinks that number sounds crazy, just know that's how most small business can escalate. Quickly. And when the numbers are small, doubling or growing by 50%, it's just part of that early traction. What helped them most was that one of the owners was well known in their field. Having a name in Hollywood, even in a niche area like wardrobe for studio shoots, it carries a lot of weight. There's always work for people who have proven themselves on set. So they were busy, they were thriving, but their books were telling a different story. Or more accurately, they were not telling a story at all because nothing was being captured in the right way. When I first got on call with them, even before looking at the file, I had a pretty strong sense of what I was walking into. They casually mentioned that they've been using QuickBooks Payroll. Then they said something about switching to a payroll company specifically for the entertainment industry. That company is called Wrapbook. So now they had payroll running through QuickBooks and they had payroll running through Wrapbook at the same time. When someone tells me that, I already know what will follow. 2 sets of 941s, 2 sets of 940s, 2 sets of payroll liabilities in the book, 2 companies electronically filing the same quarter for the same EIN, and the IRS treating both filings like a tug of war until they just reject both of them. That alone is enough to cause a mess before we even look at the book. Once I did open the books, the 3 immediate red flags were exactly what I expected. The first was credit cards. Anytime I see personal credit cards inside a corporation's QuickBooks, I already know the cleanup is going to be maybe a little bit messy. It's not judgment, it's just a reality. Commingling always takes longer to unwind than most people think. There were personal credit cards with hundreds of personal transactions sitting in their chart of accounts. There were authorized users for employees on personal credit card accounts. People were buying wardrobe materials, cosmetics, supplies, and everyday household items all in the same card. No matter how good of a bookkeeper you are, you cannot script a rule set cleanly around it. The business expenses get lost in the noise, and it would need to be filtered out one by one because a vendor like Home Depot, for instance, can support the business as much as it can support your personal side. The second set of red flags was the undeposited funds account. It had a balance and that's been sitting there historically for years. Anytime an undeposited funds account has been building up over multiple years, it tells you the business had never understood what the account was doing, and that's not really their fault. QuickBooks does not explain that account very well. But when the balance does grow year over year, it suggests that payments were being recorded in QuickBooks, but there is no properly matched deposits. Unraveling that could take a while, even as professionals. The third red flag was payroll liabilities. They had 2 separate liability accounts, one for QuickBooks Payroll and one for Wrapbook Payroll, and both had money in them. That told me immediately that both systems were actively running at the same time. It also meant to me that every 941, every 940, and potentially every W-3 filing was going to need to be corrected. The bookkeeping could be perfect, but multiple payroll providers filing for the same EIN is always going to create a compliance problem. On a scale of 1 to 10, the commingling in this case was probably a 5. I've seen a lot worse. I've seen sole proprietors running every aspect of their life through their one business account. But this was an S corporation, and the presence of personal transactions in a corporate entity is always an issue. You could see apartment rent, you could see personal entertainment, you could clearly see non-business expenses running through business accounts. It was not catastrophic, it's just very typical for a company who grew faster than their internal systems. When we got on our first real consulting call and started going through these things, the owners were very open-minded. They were overwhelmed by the accounting side of the business, sure, but they were not helpless. They were very smart, talented, hardworking people. They were just in that moment that every business owner faces at some point. The moment where you say, I cannot keep managing this part by myself. I need to hand this off to someone who does it full time. The payroll issue was the one that really surprised them. When I started explaining how the IRS would likely reject both sets of filings because of the duplicate submissions, you could see the look on their face like, oh, we had no idea. That's normal. Creative entrepreneurs are not expected to know payroll compliance. It's not their world. But for me, the moment I knew when this was not going to be a simple cleanup job is when we started talking about a decision point on whether to salvage the existing QuickBooks or rebuild it entirely from scratch. Anything can be technically fixed. The problem is the cost of fixing a QuickBooks account can be like 3 times as much as building a fresh, clean one. When you have years of undeposited funds, years of commingling in 2 payroll systems and a revenue recognition method that has not been consistent, rebuilding becomes the smarter move. I explained it to them in simple business terms. You can pay me to unwind 3 years of errors, or you can pay me to build a clean new QuickBooks Online account that reflects the business going forward. Same cost category, just very different values. They understood immediately. Business owners speak the same language when it comes to cost versus benefit. They agreed to keep the old QuickBooks account open strictly as a reference. If we ever needed to know what a specific vendor was or what a specific transaction meant, we could look at the old bookkeeping. But nothing from that file was going to drive the financial reporting going forward. The rebuild process took just over 2 weeks, creating a new chart of accounts, rebuilding their structure, setting up new workflows, integrating new corporate credit cards, establishing rules for spending, and cleaning up their payroll structure. Setting expectations with both the client and their CPA about the 2 payroll providers was important. The CPA was going to need combined numbers in order to rebuild the corrected 941s and 940s. This is not a QuickBooks problem because unfortunately they don't create corrected forms. It is a regulatory reporting problem now for our business owners. Our job was to prepare reconciled and accurate payroll data so the CPA could rebuild those filings on their side. One of the trickiest decisions in the rebuilding was invoicing. Because they were using QuickBooks payments in the old account, the question became whether they wanted to bring invoicing into the new QuickBooks mid-year or keep invoicing in the old one until year end. We ultimately decided to keep invoicing in the old book until December and then start invoicing fresh in the new on January 1st. It created a cleaner cutover and avoided hybrid pseudo-accrual accounting situations that can complicate the revenue picture. The biggest immediate win for them was simply having their books updated on a consistent schedule. When bookkeepers tell people that surprises come from not doing your books every month, that is not some scare tactic. It's just how taxes work. If you do not know what your revenue and expenses are each month, then your tax liability always feels like it's coming out of nowhere. Once the new system was live, the emotional transformation was visible. They were much more confident and they were relieved. They felt like they finally had support in an area they did not quite understand. And they also have the benefit of having done their own bookkeeping for a while. That means they have enough basic understanding of the system to appreciate the difference between guessing and now knowing. I always tell business owners to learn enough about accounting to be able to check their bookkeeper's work, not to do the work themselves, just to know how healthy books look like. Behaviorally, they made significant improvements. They stopped putting rent in the business accounts, they stopped using personal cards for business purchases, they formalized their corporate spending, and they got new credit cards for their employees so that all business expenses can be tracked cleanly. They continued to pay themselves in the way they always had, which was through payroll and then a reasonable amount of net income distribution after year end. On the CPA side, once we sent the reconciled combined payroll numbers, the process was quiet. Anyone who's ever worked with compliance knows that silence is usually a sign that things went smoothly. Payroll corrections are never fun, but when the underlying numbers are consistent and reconciled, it does make the CPA's job dramatically easier. For me, the engagement really reinforced something about the creative industry that I always appreciated. Before I got into bookkeeping many years ago, I was a creative person too. I understood the mindset. Creative entrepreneurs see the world just differently. They care deeply about the craft, they care about their work, they care about the final product. Accounting is never going to be glamorous to them, and that is fine. It does not need to be. But I just wish more creative professionals understood how much healthier their business feels when the numbers are not a mystery. What this couple showed me is that creative agencies do not struggle because anyone's irresponsible. They struggle because they don't have the systems that grow at the same pace that they do. Their revenue outpaced their structure, their team outpaced their controls, their opportunities outpaced their financial clarity. The moment we matched their systems to the scale of their business, I think everything felt lighter to them. And if there's one lesson that any agency owner can take away from this story, it is this: it's okay to ask for help. There's no badge of honor in trying to be your own bookkeeper forever. You do not need to know tax code. You do not need to know payroll compliance. You just need a system that gives you accurate financial information so you can plan, spend, and operate with confidence. If your creative business is growing and the numbers feel cloudy, this is exactly the situation that can be fixed. And once you fix it, the entire business feels cleaner, the anxiety disappears, and the decisions become easier. If you think you need help with this, don't hesitate to reach out to us here at Chief Bookkeeping Officer.